Hey, everybody. We are here. This is Dr. Danae Starks, and we are here with BSBA, bringing you week 2 of our business and tax structuring webinar series. We have gotten a wealth of information and feedback from the community. And so we're, excited to bring this information out there. This is information that other people get sometimes, but it doesn't always filter out to our community. And so we wanted to make sure to bring this information, make sure that it was helpful to you in your business, or when you're thinking about your business structure, or when you're thinking about how to do your taxes. So we're just grateful to our hosts for this series, Pastor K from Speedy Tax Services, and then we have Donald from Reed Williams Attorneys at Law that have joined us for week 1. We're now in week 2. So today the discussion will be about sole proprietorships, LLCs, LLPs, LPs, partnerships, things of that nature. That will be the focus for this week. As a reminder, I want to take a couple of minutes and share about what's available out there. The California Relief Grant, round 6, that opened up yesterday on April 28th. It does close on Tuesday, and it's not 11:59, it's not 9 p.m., it is 5 p.m., okay? So remember, if you haven't applied already, go in, CaliforniaReliefGrant.com. You can find out if you're eligible. You can look at all the details of the grant and the different grant opportunities, meaning the different amounts that you may or may not be eligible for. You can go to BSBA, we'll put it in the chat as well, www.bsba.ca.org. And you can sign up, you can register right there. You can actually apply for the California Relief Grant right there from our homepage. We are a partner with the Lendistry, and we would love for you to apply through our portal. Again, do not miss out. Do not miss out on what is out there and what's available. If you don't need it, or if you've already applied and you're on the wait list, hey, there's another opportunity right now to just wait until this round is over and see if you are a recipient of this grant. If you don't need the grant, or if you don't qualify, or something of that nature, please share this information with one of your friends, family members, people in business that you're in business with, all of the above. We want as many people to get into this last and final round that can. We don't want you to miss out. So at this time, I am excited to introduce everyone to Pastor K. Powell. She's been with us on several things. She has her Tax Tuesdays. We're just so grateful that Pastor K and Donald are joining us on this week to bring to you the business structuring component with some good detail about this subject. And so who better else to have than the specialists in their field? So I am going to step away, and we're going to bring up Pastor Cal to take us to the next level. Hey, Pastor Cal.
Hi, how are you, Dr. Danae?
I am doing great.
For hosting me today and allowing me to come and talk to your constituents and all of your clients and everyone out there. Hopefully this is going to be some good news. You'll be able to educate you and help you learn more about business. As you know, everything is focusing on small business, and I have over 35 years experience. And what I'm finding out is that more people operate their business like a hobby versus, hey, that's right, the tax guru, versus operating it like a business. Come on, people, it's time to get your structure together, to really give some serious thought about how you can be in position to not only succeed, but to receive all the grants and everything that are out there, but more important, how to make your business successful. So our first week, we talked about the business structure. What are the various small business or business structures that you can establish in order to do your business? And the business structures we talked about were sole proprietor. We talked about limited liability, which is LLC. And I'm being joined now by our attorney, Donald Reed Williams. Hi, Donald.
Hi, how are you doing?
Good. Glad that you're able to join us. So I was giving a quick highlight of last week. We also talked about S corporations, we talked about C corporations, and a little bit about their partnerships, the various structures that are available. And then we also talked about the liabilities of the different structures. So this week, Donald and I are going to talk about, I'm going to talk more about the tax structures, the tax benefits of the sole proprietor versus the LLC. S Corp. And Donald's going to talk more about just into liability. So we gave you really a highlight last week. This week, we're going to try to give you some details, try to go more into what the tax liabilities are. And hopefully, it will answer some of your questions. It will help you to properly structure your business. This is our goal, or to restructure your business, to get your business in order to how you can be successful and really understand when somebody asks you, why do you have an LLC? I'm hoping that you can answer these questions. So let's talk about sole proprietor and what the taxes are as a sole proprietor. So as a sole proprietor, that you're taxed at your personal level. So whatever your net from your expenses. So what you're going to have, people on Facebook, not you, keep pushing the LLC movement with no, that's right. And so we are going to talk about that. Is it better? It's better for some people and better for not. So we talked about the liability and why you should have an LLC or not. Now we're going to talk about the taxation. I'm going to talk, that's my expertise, is taxes. So as a sole proprietor, what happens is that you got to pay payroll taxes. Your payroll taxes are 15.3%, meaning you got to pay self-employment tax, which is Social Security and Medicare, off the top, off of line 7. After that, you also pay your taxes off of line 31, meaning like after your expenses, your net expenses is on your personal tax, whereas as a sole proprietor is how you pay taxes. So there are some people, I get some people that have children. I'll give you an example. You got 2 kids. You make the same amount as someone as a W-2, but that W-2 person is going to get $9,000, maybe say earned income credit. But the sole proprietor is only going to get $6,000 because they have to pay $3,000 in self-employment tax. And so they're like, well, why? Even if I get it down to 0, I still got to pay self-employment tax. Yes, you have to pay Social Security and Medicare, which is 15.3% of your gross. So that's the difference about the sole proprietor as far as taxation. It's taxed at whatever tax group you're in. If you're 15%, 12%, 10%, 12%, 22%, 24%, whatever the taxes, that's how you're. If, for me, if you need the income and it's just you, yes, this sole is suffice right now, Kenya, as depending on how much money you make. Now, if you're a sole proprietor, you're making 20,000, 30,000. I say, yeah, you're fine as a sole proprietor. But as your structure, if your business starts booming and you start making a lot of money, then you're going to want to look at what are the other options. The other taxation option is an LLC. So before I move on to LLC, I didn't want to leave Donald out because this is an interactive.
No problem. I mean, next, like when we're talking about setting up your business structure, tax. You've heard me say this before. Tax is probably the most important part of it. You have your taxation and then you have your liability. When most people are setting up their business, they're really just trying to get it started. I don't know how many of them actually factor in liability, that liability aspect of it. Some people actually factor in tax, but that's definitely something that you should consider, especially when you're thinking about opening a small business, whether it's a sole proprietorship or an LLC, which most people are familiar with. And so when you're dealing with sole proprietorships on the liability side of it, you're responsible for you're responsible for all debts and liabilities. And so if somebody sues your business, they're suing you as an individual, essentially. And so you would have to come out of your pocket, not the business, because you are the business. And so you'd be coming out of your pocket to pay for this lawsuit, to pay for the debts of the business, because you are the business, you are the individual. And so that's kind of the cons of the sole proprietorship, that you're responsible for the liabilities and the debts. But as a sole proprietorship, you receive all the profits. It's your name or whatever. If you have a fictitious name, that's fine too. You would have to file that fictitious name with the county so that they're aware of it. You don't have to file any paperwork with the California Secretary of State's office. But depending on what kind of business you are, what type of business there may be some other filings that you may need to submit. But again, like I said, it just depends on the business. So that's the liability side of it. Like I said, the taxation is way more important because, if you do it right, you can save yourself a lot of money.
Yeah, that's good, Donald. You made some really good points. So people need to also understand, as a sole proprietor, you need to see if you need a business license. Part of your liability is also making sure all your I's are dotted and your T's are crossed. And what I find out is people, hello, good afternoon. What people do is they kind of start a little hobby, then it starts evolving. But what you want to do is you want to actually make sure that you also have your business EIN number. That's an employee identification number with IRS. You don't have to have that. I really like that because then you don't have to give everybody your social security number if you're doing business out there with people. It protects your personal stuff. But you don't have to have that, especially if you're not doing business where you're giving anybody that, where you're just receiving income, but you're not having to do a W-9 or having to give people information. But it's the easiest to set up the sole proprietorship. That's why a lot of people go that way. But I do see people make mistakes. When they start making, 6 figures, 30,000, 40,000, now I start thinking, I see people making a mistake is because they keep themselves paying all this self-employment tax. Is not the best the best situation in regards to that. So if your business starts growing and you're making 30, 40, 50,000, I recommend that you start looking at other options. So the other option, one of the guys on here said, everyone's pushing LLC, limited liability. Well, limited liability has a lot of benefits of it, but it also can have its pitfalls for people that maybe can't afford it. The limited liability, as we talked about last week, the LLC single membership one we talked about mostly, but the limited liability protects your personal assets. So if there, as Donald says, if you're getting sued or whatever, the LLC protects your personal assets. But what it does, though, is that it does put you in a situation where you may have some extra fees that you're not used to having. Tax-wise, so I'm the tax guru, y'all. That's why I'm going to talk about taxes. Tax-wise, it is a disregarded entity, meaning that you file your LLC with the federal and the state, but you don't pay taxes on the LLC. You pay taxes on the profit that comes through after you've done your LLC. So it's a pass-through. So you do your LLC, say you got $10,000 you made, you got 8,000 expenses, your 2,000 would pass through to your personal taxes, and you would have to file what they call a Schedule C on that 2,000. And you would have to pay self-employment and any taxes on that, personal taxes on that 2,000. So in a way, it's really good. So Kenya says, I started my business for my daughter, EIN in her name. I've never used it. How do I switch it? Do I notify IRS and tell them? Well, IRS, I don't believe. I'm not an attorney. So I'm going to let him answer that question.
Hold on, let me see this question again. I started my business for my daughter, EIN in her name. I've never used it. How do I switch it? Do I notify IRS and tell them? Okay, so trying to switch the EIN to who? If the business is in the daughter's name, or it's a business for your daughter, the EIN is in her name. Why would you switch it? You can respond, and then I'll follow up.
And we'll get to that later. So let me finish talking to you now. So we're talking about sole proprietorship. Now we're going to move to the name. We're going to move to LLCs in regards to the benefits, the up and down and benefits of the LLC. Everybody wants one. Everybody gets one. Why are you getting one? Oh, because my grandma told me, my auntie told me, and my whatever. But have you really thought it out? Do you need one? Well, if you got a little mom and pop thing and it ain't doing nothing, you don't need one. But if you got something that unless you got employees out there that are putting you at risk, then even if I wasn't making one, I get an LLC. But if it's not, LLC will help you in regards to, it's a pass through. you put your expenses at the LLC level, and whatever the profit is flows through to you, and that's what you pay taxes on. But the LLC, it's a little more difficult. You got to file papers, as Donald says. You got to file papers with Secretary of State. You need an EIN number. In different states, depending. In California, you have to pay a franchise tax every year. You got to pay $800. You got to file a statement of information every 2 years, which is only like $20. But if you don't, you can your license can business can be suspended. So this is what I have. I have people sign up an LLC. They don't know why. They just sign up one. They ain't making no money. And then when I tell them $250 to do your LLC, they almost fall down. Then when I tell them that they have to actually pay franchise $800, they don't want to pay it. They say, "Well, I didn't make any money. Why should I?" So, and franchise does allow you the first year, you don't have to pay the $800. But after that, you have to start paying the $800. So what happens is that then their business gets suspended, and then all of a sudden they gun ho and want to use it, but they're saying they don't understand it. So if you're going to get an LLC, understand why you're getting it. Try to really think it through. Talk to some people. Don't talk to the man on the corner with the pan. Talk to someone that has some expertise in that area and say, "This is my plan. This is where I think it's going to go." And let me tell you that there's so much advantage of an LLC, because if you got an LLC and then it starts making a lot of money, now you can switch it over to an S corp. You can submit paperwork to IRS and move it to an S corp. Now, when you do that, then it's a pass-through entity too, taxes, but you don't have to pay the 15.3%. It passes through as like an investment. So that's when, I tell everybody, if you're making over 100,000, you better make yourself S corp, because you are really, the difference can be thousands of dollars in regards to taxes, right? Right, Doug? So I don't know. I mean, like I see on here, she wants nothing to do with the business, all me. I want to switch it to mine. So she wants to switch she wants to switch ownership.
Correct.
So Donald, you're the attorney. Can she do that?
Yeah. So she can switch ownership. That's something, because it's an LLC. I mean, that's something that you'd have to do formally. You could either dissolve the business, like you can, she can just essentially get rid of it and the mom can pick it back up, or you can probably handle this on the tax side and, deal with the IRS or even have a tax advisor and see if it's something that you can simply just, switch over, like get an EIN in your name. And it's probably, I don't know if it's that simple or not, but, there are maybe a couple ways you can do that. Just like you said, it's not an LLC, it's a sole proprietorship.
Then she really cannot do it.
It's a sole proprietorship that she was saying. And if it's a sole proprietorship, then the mom, if it's going to be your business, then you would have to put everything in your name. And essentially, you would have to take your daughter off and then redo everything in your name. I mean, because it's a sole proprietorship, it'll be a lot easier. And so it shouldn't be that difficult for you to do.
Yeah, I would. Oh, good. You're welcome. I would, if I were you, I would just take it the simple road. The simple road is dissolve it, redo it yourself, and put in your name. Okay, so, I think about when I'm doing people's taxes, this is why we're here. We're trying to help people get a great foundation on their business. It's so important that you understand about your business, that you understand what your business is and understand what the pros and cons of it, so that when you get to a certain place, you can make some informative decisions. And this is the reason why I'd like to really shout out to BSBA, why they're bringing you this workshop, because they do consultation in this area. We have expertise. Now, our community lacks this information. So we're trying to beef you up so you'll understand about what you need to do in regards to having your business structure. So the other thing when we're doing taxes, I mean, this is what I do. I'm the tax guru. It's important that you understand and make informative decisions on your business. I've even had people that have had a business and they don't want me. Well, I don't want to do the LLC. I just want to do the whatever. Well, then you need to dissolve the. You got to handle it the right way. You got to dissolve your LLC, because what happens is that IRS, they start thinking, if you don't do this right, they start thinking that you're trying not to pay taxes, and you know that's what you're doing. But anyway, and they're going to jam you about it. So what you want to do is you want to handle the structure in a manner that you don't have any IRS problems. And so that's why we're trying to educate you about this. Sole proprietor, that's the easiest to set up, probably has the most tax liability in regards to, you take the write-offs, you take the expenses, and you pay the self-employment taxes directly. That's a single, sole proprietor. Then you talk about LLCs, which LLCs, if you are the one to get with the big boys, now we're stepping it up and we're stepping up to the big boys. Be prepared to pay the fees. If you want to protect your business, but you still have to play the game. You're now in the LLC, which is not a formal entity structure. It is a pass-through entity, a disregarded entity, but you still got to pay franchise fees. S corporation. I love S corporation. I highly recommend that to anyone that is making any kind of money. This is, unless you really need it. Now, this is when I have found out people have had a problem, Donald, is like they have no other money. They need that money to qualify to buy a house or something. And if you flow it through the LLC, of course, the numbers shrink down because the LLC is going to take the expenses and give you the profit. But if after that, then I would tell people, if you're making $50,000, if you're making any kind of money, then you want to now have an LLC because you want to limit your tax liability. It's an acceptable structure by IRS. So you're not doing anything other than playing the game with them. So that's what I would recommend for that. Now, in regard to like partnerships, I know we're supposed to talk about partnerships a little bit, right? Are we supposed to talk about partnerships?
Let me real quick before we go into partnerships. I just wanted to go into the liability aspect of the LLC. Okay. So for the LLCs, the benefit of establishing an LLC versus a sole proprietorship is that no LLC member or manager or officer, for that matter, is required to be personally liable for the LLC's losses or debts or liabilities and obligations. And so each member is permitted to manage the company and take part in controlling the company, but you aren't personally liable for the debts and liabilities of the LLC, which is huge because the court looks at the LLC as an individual, as a person. And so that entity, that person is separate from you as a person. So, if you are Jane Doe or whoever starting LLC, your LLC will be responsible for the debts and liabilities of that LLC, not you as Jane Doe.
Right. That's huge. That's really huge, you guys. Everybody, please listen to this. Especially if you have a business where you're vulnerable, where you got employees or you've got a business where you could be sued. This is so critical to your business. And that's when you really should be looking at, how do I protect myself? How do I keep my liability down? And that's when you want to set up an LLC. But don't just set it up just to be setting it up. Don't be setting up because you don't really need to. You doing Mary Kay and you got an LLC. You don't need an LLC for no Mary Kay products. And there are some other things where if you're a sole proprietor, you can get emissions and risk insurance that will protect you as well. So, just really think about it. Talk to somebody. Even if you have to go pay $250 a consultation fee and say, because it can change the direction of your business and your life. So I recommend that you really look into this. So, what else? Rush through this, but I want to make sure I've covered everything. Is there any questions out there? I know that I have some fans out there that are looking at this. Oh, I know what else. There is a Trump actually established a pass-through deduction, which is a 20% business deduction also. And that is real important for businesses, that is a pass-through that will also reduce your liability, your tax liability out there. So it's the quality business deduction 20% that you can get as well. So I think that's really important as far as looking at taxes and how does that help you tax-wise. We were sole proprietors and LLCs were very, very blessed when at first, when all these grants were coming through, 31 is your salary. But because nobody would qualify, they changed it to line 7. And, you know, as doing taxes and everything, I never really got to really understand, or I just thought about, well, line 7, they consider that as your salary. And that's why you have to pay the self-employment taxes, payroll taxes on that. But now they've also allowed that to qualify you for these PPPs and all the different grants and loans. And I really think that's a win for the small business community. So now let's talk about, Donald, do you want to talk about the partnerships now? Can we move into the partnership LLPs?
Sure.
I don't really have too much to say about that, but you can say something about it as far as like liability.
Sure. So as far as the partnerships, I'm not going to go into the limited liability partnerships because that's mostly for when you start getting into the professions of, you know, the practice of law, practice of architecture, public accountancy, those type of things. And so I'll keep it. I'll just keep it to the general partnerships and the limited partnerships. And so for the general partnerships, if there are, which are 2 or more persons engaged in business for profit, and the partners are liable jointly and severally for the debts and liabilities of the business. So what does that mean, jointly and severally? So if you are sued and you are a general partnership and there are only 2 of you, it doesn't really matter if it could be 2 or it could be 5, it doesn't matter. You guys are responsible for the debts and liabilities. Like this, it is what it is. You are personally responsible. It's almost like being a sole proprietorship, but you're a partnership. And so when I say jointly, that means you guys together are responsible for the debts and liabilities, and even severally. So even if one of you can't pay, the other one will still have to, you know, be personally responsible for the debts and liabilities of the general partnership. And so the way the limited partnership differs is that in a limited partnership, it's still 2 or more, but you have a general partner, and then you also have a limited partner, or you can have limited partners. The general partner has unlimited personal liability for the debts and obligations, or debts and liabilities of the limited partnership. The limited partner or partners only have liability as far as their their investment into the partnership goes. So however much investment or capital you have in that limited partnership, that's the extent of the liability you have in that limited partnership as a limited partnership. So just to clear it up, in a limited partnership, the general partner of the limited partnership has unlimited personal liability for the debts and liabilities of that limited partnership. The limited partners of the limited partnership have liability to the extent of their investment into that partnership.
Okay, that makes sense. I get that. So when I'm doing taxes for them, what happens is each partner is given a K1, which they're cut into whatever the percentage of whatever the profit is or loss is, and then that flows through. And then what I do is I use that to prepare on their taxes. So either paying tax on that, or it's a loss on it. But that's what happens in partnerships. And then we also have the C corporation. So did you hear what's going on, Donald? That Biden had said today, and I knew it was going to happen, that the 22% that the C corp pays is getting ready to go up to like 38% or something like that. I mean, like a tremendous amount. So what happened is that Biden has said that the big boys is going to be paying the taxes, and so that 22% that everybody was enjoying during the Trump administration is about to be over, and so that's the only tax corporation when you're talking about that. When you're talking about the S and LLC, the C corp it is recognized as an official corporation entity, and they actually pay taxes to IRS at a certain level. And it's been 22%, and now is getting ready to move probably by June or July. It's getting ready to take up and move to, I don't know what exactly proposing, like 30-something%, where it used to be 30-something% before. Now it's going to return to that because somebody got to pay for all these PPPs and all this extra stuff that's going on. So some of it is going to flow through the corporations, what I heard Biden say today. So the C corporation is a tax. So you pay taxes at both levels. The issue with C corporations, you pay federal taxes, and you also pay taxes on the profit in your taxes. So you pay taxes twice when you're a C corporation. All the partners are divided up, all the shareholders in a C corp paperwork, and you got to go pay taxes on that twice. You pay it at the federal level, state level, and then you pay it on your personal taxes. So C corporation, though, I do know some people that are willing to do that because it's still, well, 22, it was lower than what maybe they might be in if they did on their personal taxes. So they were taking it all at that level. Now, one of the things that you guys need to understand, an S corp, C corp, you don't just not, like, if you're an S corp, if you're an owner of it, you have to pay yourself a salary. If you're an officer, you are a W-2 employee from an S corp, and if you don't do it right, IRS could accuse you of trying not to pay taxes, and it's not good. So you can't do a 1099 if you're an officer and you own your S corp. You're not a 1099. You are a W-2 employee at a comparable level of the same type of work of what someone else is doing. So you cannot avoid the payroll taxes. I make $2,000 a month, and all the other executives in your level make $5,000 a month doing that same type of work, and you have that kind of income. So that's why you really want to talk to somebody that has some experience. Say, I'm an S corp. You got to do payroll. Oh, I don't want to do payroll. Yes, you have to do payroll, not a 1099. See, when you start picking these corporations, people, you have what comes with it. You need a bookkeeping service. You need a payroll service. You are not the expert in all this stuff. It's like me trying to go and represent myself at the courthouse. I need Donald. I don't know what to say. I don't understand the law, and I'm going to lose. And so if you're a business structure and you want the best foundation, I'm telling you, you want to look at how to properly set up your organization. And you want to have a payroll service. You want to have a bookkeeping service. You want to have a tax expert. You want to have an attorney if you need it. You want to have these experts in your book or in your whatever I want to call it, so that you will be able to take advantage of their expertise. You cannot simply say, oh, well, I'm just going to I'm making 200,000, and you're going to sit there and not W-2 yourself. You're going to get yourself in trouble, especially the S corp. IRS don't like that, not at all. As a C corp, I believe that's true too. You have to pay yourself as a W-2. You can pay shareholders. Other people that are doing work, but this is very critical. As an LLC, this is passed through, and you don't have to what you're taking on. Those are expenses, right, Donald? Right, Donald?
Sorry, I had to mute. I'm actually outdoors right now.
Okay.
But I heard you. I heard what you were saying. But in terms of the C corp, you're in the S corp. You're absolutely right. As an S corp, I'm actually an S corp myself as a law firm, and I do have to pay myself. I W-2 myself, and that's something that is just a part of making sure that I don't get hit up by the IRS. Either this year or next year. And so it's very important. You definitely have to have a tax advisor. If you need somebody to do the bookkeeping for you, you definitely need that. And just real quick, talk about the liability of corporations. This is probably the simplest one to understand, and it's in line with the LLC. The corporation is the courts view corporations as a separate legal entity, and so what that means is the business, the debts and liabilities of the business are the responsibilities of the corporation, not the CEO or the founder or the president or any other officer of the corporation. And so there is no personal liability for any of the individuals in the corporation. The corporation is a separate person. So, I guess you can take, for example, my law firm, Reed Williams. It's a corporation. If Reed Williams, the law firm, gets sued, they're suing Reed Williams, the law firm. And so whatever debts and liabilities that Reed Williams, the law firm, has, that's all you have to work with in a lawsuit. You don't get to come after Donald Reed Williams, the owner of the firm, for those debts and liabilities, because I'm separate from the corporation. And that's how it works.
So thanks. So, we are about to wrap it up. I don't see any more questions. Just to quickly let you guys know, so we're going to just quickly summarize it. A sole proprietorship is easy to set up. It's just you. You have personal liability. If somebody want to sue you, you're at risk. But you want to look at it and see what type of business you're doing or whatever. So there's no personal liability protection if you're a sole proprietor. You're on the hook for anything. So that's what we said about sole proprietor, and you pay payroll taxes, self-employment, and any net personal taxes. As an LLC, you're off the hook, in regards to you're not personally liable. They can't sue you as long as you do your business right and you set your stuff up right and you got a good foundation. You're not personally liable and you're not on the hook for any of the business liabilities. But there is the little drawback, and the drawback is that you have to do ongoing filings to stay right, and you got to pay fees. You got to make sure that you do that to stay in compliance as an LLC, or you could lose it. The S corporation as well. Why, people keep saying, well, what would be the reason why, if I have a sole proprietor, why would I want to change it to an LLC? Well, I will give you like 3 little tips or 3 reasons. One is what we keep saying, you protect your personal assets. That's the number one. The number 2 is you have a flexibility. You can be a partnership. You can have an S corp. You can even make it a S corp, or, well, that's those 2 things. And, that changes your business. If your business grows, you have the flexibility to say, okay, I'm an LLC. Now let me make it an S corp. So that's one of you want to look at maybe if you're growing and you want to become an S corp, so you don't have to pay the self-employment tax. So those are some of the reasons why. But just to be doing, that's not a reason to do it. You need to really have solid reasons why you would want to be a sole proprietor versus why you'd want to be an LLC, whether you can be a S corp, partnership, or whatever. But it is critical. What I'm finding out is so many people are misinformed, don't have information, don't understand, and even when they become an LLC, their business is still raggedy. They don't have a business account. They don't do the filing. They don't pay the fees, and it's a waste of time. So this purpose of this workshop is to help educate you, to help bring you into the know, into the knowledge, to help our community come up, to help our community to figure out where they are and how to be in position to have a foundation. This country, we need the small businesses. I am such a small business advocate. It is so critical to me that you understand what you're doing and be able to be solid in your business. So I don't want you to go under. We want you to be successful. We want you to succeed. So I hope that you found this information valuable. Donald and I will be back with you next Thursday at the same time to talk more about your business structure, to give you information. So I want you to spread the news. Tell everybody about what BSBA is doing. You can contact me if you need any taxes and need to get yourself together for all this because your tax structure. You can contact Donald. It's on the screen, Donald Reed. You can contact him in regards to if you need some counseling. I'm talking about legal counseling and some information. And I hope this was good information for you. And I hope that you'll join us next week at the same time. BSBA, actually, they do consultation and they will refer you to us. Look, did you hear that? Did you see that on the screen? Free consultation. That is just magnificent. BSBA, I'm so proud of you. And I want to thank everybody for joining us today. And we'll see you next week at the same time. And hopefully we can give you some more information to really be able to strengthen your business and to be solid in the community and to be there waiting for all the resources that are available and to stay open. So God bless you. I'll see you next week. Thank you, Donald, for taking out the time, especially like outside. I hope it's not too cold or.
Oh, no, it's fine.
Okay, great. So God bless you. See you all. Thank you. See you next week. Thank you very much.